Hello. Oil steadied in early trading today after dipping yesterday on news that the U.S. may ease sanctions on Venezuela in an effort to increase the flow of oil to world markets to alleviate high prices. Venezuela's government and opposition will resume long-suspended talks today, which if proceeds positively, could lead to Washington easing its sanctions. Although the deal would help raise Venezuela's oil output, given the state of the country's energy infrastructure, a near-future production surge seems unlikely. Considering this, together with the short-term bullish factors such as the uncertainty regarding the Middle Eastern conflict and the U.S. sanctions on tankers carrying Russian oil above the G7 price cap, oil prices look likely to hover around $90 for some time. Most Asian indices rose today, recovering a portion of the losses from the past week, following in the steps of Wall Street, which was supported by the surge in heavyweight tech stocks. Asian markets also took positive cues from the stronger-than-expected non-oil exports data from Singapore, which acts as a benchmark for trade in Asia. Meanwhile, looming Chinese GDP data due tomorrow is limiting gains as well as weighing down China-dependent assets such as copper and the euro. Johnson & Johnson has released third-quarter earnings today, reporting EPS of $2.66, 15 cents better than the analyst estimate of $2.51. Revenue for the quarter came in at $21.40 versus the consensus estimate of $21.04 billion. Analysts had mixed forecasts for earnings because of the company's outlook after talcum powder lawsuits. However, the company managed to exceed analyst expectations. The company also upgraded their 2023 guidance, now expects 2023 adjusted profit of $10.07 to $10.13 per share, compared with its previous outlook of $10.00 to $10.10 per share. Bank of America Corporation topped estimates in third-quarter earnings today with EPS of 90 cents versus the consensus estimate of 83 cents and revenue of $25.2 billion against the analyst expectations of $25.13 billion. Chairman and CEO of the company, Brian Moynihan, indicated that they delivered a strong quarter despite the slowing U.S. economy. Supported by the higher interest rates, bank's net interest income rose %4 to $14.4 billion. Investment banking and trading units also managed to outperform Wall Street expectations as they reported higher revenue. As PhillipCapital team, we wish you happy and healthy days.